All right, guys, welcome. I'm glad that you're here. If you're someone who is seeking uncommon results, this podcast is for you. Success, happiness, and wisdom. What do these words mean to you? I think we can all agree that we'll probably all have slightly different definitions of each. In these podcasts, I get to dive deeply into conversations with some amazing innovators, influencers, and trendsetters that have had different versions of how they define the terms, yet have come out on the other side with amazing, uncommon results. At some point in their lives, they have decided to unshackle themselves from the norm and go beyond all boundaries. Well, welcome back to the show, Beyond All Boundaries, everybody. I hope everybody's having a good start to the new year. We're a couple weeks in, and I have a great guest today, Mark Monroe. Mark is an owner of the TIA Asset and is involved in real estate and has just done a lot of things throughout his career, a lot of different ventures. And so we're excited to have him on the show today to kind of share some of his knowledge, his wisdom, and his insights of things that he's learned along the way and things that he's doing now to help and coach and educate people across the values of what he does. So Mark, welcome to the show, man. Appreciate you being here.
Hey, I appreciate it. Thanks so much. Thank you for the invite.
You bet. So why don't you share with our listeners a little bit about a background about yourself and kind of who you are and what you're doing right now, and we'll just kind of go from there.
Sure, I appreciate it. So I currently live in South Florida, Boca Raton, Florida, the Deerfield Beach area. But I grew up in a small town up in Vermont, just at the base of Killington, a town called Rutland, and population about 10, 12,000. It was people were great. Grew up extremely poor. I always had to get my handy downs or whatnot from my family and, other relatives. And then, at the age of 15, I actually started working many times before that, neighbors and mowing lawns and whatnot. But, I started at the age of 15, and my first job, I was there for 10 years. And believe it or not, I started out at McDonald's, scrubbing toilets, and end up working my way up in through management. And they paid for my schooling, and they're great mentors. So it kind of took me in a good direction of learning the business and learning discipline and getting away from the wrong crowd, if you will. And then so after being there for 10 years, I got transferred down to the Washington D.C. area. So I was in the D.C. area for about 10 years. And with McDonald's at the time, after you've been there for 10 years, you get 2 months paid vacation plus your regular. So I took this class to learn a little bit more about loan originating for mortgages. So I took that class, and the instructor, he liked me. He goes, "Hey, you're out of position. You want to work for me?" So I had another month and a half to go. So I went over there and I worked for him, and I got the bug, and I ended up working with him for a couple of years, and teamed up with two other gentlemen. And then we started our first business, our mortgage lending business up in the DC, Maryland area, Virginia area. And we blew that up, and we had actually 107 employees after a couple of years, and we blew that up. And then just learned business along the way. And then from there, I ended up coming down to South Florida. That's what brought me down here, and got into that whole .com thing. So in my 20s, I was making, coming from such a small, poor little town in Vermont. I remember like 2 months, as a child, like, you remember the Kraft macaroni and cheese, you get out of the box. So for 2 months straight, that's all we had for, breakfast, lunch, and dinner, for 2 months straight, Kraft macaroni and cheese. That's all my mother could afford to pay all of us to, by the age of 27, 28, being young and stupid, making like $30,000 a month, thinking that world is never going to end. And then I ended up coming to Florida doing another business. And then, that business, I just kept throwing money into it. It's .com, and I pretty much lost all my savings and had to start all over. And then, so I just kind of worked different businesses, and I've been, that got me into doing the real estate banking, and I met investors along the way, and they became my mentors, and, just kind of learned business. And now I buy and sell properties throughout the country. I work with a lot of people that want to get in real estate. I really specialize in creative financing, how to buying properties really with no money down through creative financing, having the sellers carry the note. There's called purchasing existing mortgages, lease options. So I just know, I've been doing it for over 20 years now. So I know all the different strategies of how to buy properties literally with no money. And and just help people grow and get into the real estate game.
When you're helping those people buy the properties with no money with the creative financing, did a lot of that come back from your, original background of mortgage lending, or has it been more sophisticated? I mean, obviously there's a lot of sophistication to it, right? But is that kind of what, kind of piqued the interest or kind of kept you going along that same route?
It did, just from being in that on the loan originating days, and having my own business, helping investors and see how the investors were buying properties and how they're structuring and doing and using us as the financing and loans, and seeing how it was done, and then how they're selling it. That's what really intrigued me, and that's how I kind of learn it. And then also learning it over the years, I've kind of put together some of my own strategies and my own techniques and take, hey, this, a little piece of this, a little of that. And that's the beauty about real estate. There's so many different ways and so many different facets of creative financing. 95% of transactions are done your typical vanilla way with realtors and all that. And I can sit there and I literally had a conversation with a real estate agent a couple of weeks ago that's been in the business for 25 years. And I was trying to explain to them how I could buy this property through the existing mortgage, taking it over, put it into a land trust, and then take over the property. And then what we do is we wrap it and sell it to an end buyer. So what I do is I really create an arbitrage. I'm using the seller's debt and putting it into a trust and then reselling it and creating an arbitrage. And a lot of people, it's hard for them to understand that. In doing so, your end buyer, you can actually technically buy a property using the seller's financing. And then the seller's like, oh, how am I going to get a loan? Can I get another loan for another property? They can. And then also, like, the seller may have their equity in the property, and you show them an amortization schedule where they can make more money holding a note and being the bank. That's the Warren Buffett style. So that's kind of how I show sellers how they can make more money. And then I help buyers buy a property if they have poor credit, but they have great income. We underwrite the loans, making sure they can qualify it, running a debt ratio. So I am in the middle. And when I do the middle, I take a spread in the middle. So I can collect them, $200 or $300, $400 a month, creating that spread, getting at a rate of, like, from the seller, like 3%, and then selling it to the end buyer, like 5 or 6%. So you can create that arbitrage spread. Plus you can sell the price a little bit of that property for a premium. So that's kind of where I specialize, and that's kind of where I help a lot of people.
So there are a lot of people that are coming to you learning how to do this methodology, and are you coaching them and guiding them? Looking at, your company, it sounds like you're doing a lot of that, but just more specifically, if someone's wanting to get into the financing space, do you coach them and guide them on how to do that as well?
I do. Really what I have a Facebook group where I do a lot of this stuff, and I send everybody to the Facebook group. It's called Creative Real Estate Finance, Creative Real Estate Investing. That's what it's called, Creative Real Estate Investing. And in there, I'm always telling people, hey, if you have questions, post them in there. I'll answer. I'll do videos. I'll set up phone calls. And really what I do is I do JVs with them, joint ventures. So they'll go out there, find a deal, bring it back, make sure the seller's motivated, and give me a narrative about the particular property or the different deal, and then we'll walk them through it. And that's how I usually teach them. And then so we partner up on the deals. So they win, they learn, I mentor them, and that's kind of how I learned the business many years ago on some of the different strategies. And then I do the exact same thing for people that want to come into the business, even investors that have been in the business that are doing stuff that want to learn different type of creative financing. The reason why is a lot of times when you're an investor, once you get to 12 properties, it's very difficult to get more loans the conventional way, because that's Fannie Mae and Freddie Mac. That's kind of the limit. So what we want to do is, you want to, acquire an asset with very little capital, so you can use that capital and deploy it through many different assets. So that's why we tend to do a lot of owner financing, purchasing that way. But you also got to make sure it's worthwhile for the owner financing. A lot of them love it, especially if they're downsizing or they're a tired landlord. So they're no longer, they don't have to worry about that toilet leaking at 2:00 in the morning. They're the bank, because what we do is we create a mortgage and put their equity in that position. And so we have to pay them monthly. So that's how they are protected on it. And with the new people, I just kind of walk them through the process, show them how to do it, and, just give them the techniques. And once they do, depending on the individual, about 3 or 5 of those transactions, they tend to pick up on it, how to do those type of transactions.
Would you say, what is the learning curve for your students going through this, and just on average? Really, there's different medians, but, like,
your
average.
It is. I'm going to say realistically about 4 months. Realistically, some sooner, some longer. It depends on the students, like, or the individual. Are they doing it full time, part time? And are they doing like what I suggest and coach them through? Hey, are you going to go do this? Are you going to do that? Some people. I had this one guy. Like, I mean, he's just been at this for 2 months and he's already done 5 already. And he's really quick. Now he's a little different than the norm. I mean, this guy's hungry. He's out there. He's working really hard. Then I've had other people that I've been coaching, helping out for a year, and they've only done a couple of deals. So it really depends on the individual, but it's not as quick and easy as people make it sound, because there's so many different facets. And even with people with experience, even like realtors or even other loan officers that understand, they're used to the typical vanilla way. So you try to explain something and you have to, for them to kind of get their head wrapped around it and just kind of go through that process. But once you've done a couple, it works well. And then also making sure the hard part for them, of the people learning creative real estate, is how to communicate that to the seller and educate the seller why it's beneficial to them as well.
So what would be like a couple of nuggets then, I guess, so walk me through that a little bit. Walk me through that process a little bit, like to where the buyer and the seller, because you're utilizing collateral, right, of the other asset, and
Yes.
You're getting creative with the finance. And collateral is a beautiful thing once you understand other people's money, right? And but doing that, so what would be the downside for the seller going that route versus the traditional route? Or walk me through that a little bit.
Well, it really depends on the seller's needs. Do they need to sell that property to go buy another property? If they don't, then that's where the creative financing really comes into play. Or I've actually had one where a lady was in Orlando where she was behind in her mortgage payments. Her children used to live with her, and it was a big house, and she was getting ready to lose her property to foreclosure. And so what in that case is, we purchased it through creative financing. We brought her mortgage current. We gave her some money to move because she was about to lose the house. There wasn't much equity in it. We saved her credit. And then what we do is we just put it into a trust, and then we make the payments on that behalf of the trust. And then what we did on our property is, then we found a family. They very good income, but they had some credit challenges. So then we put them into the property and we're selling it to them on a lease option, or rent to own. So what happens is, once they've been making payments in our property for approximately 2 years, the lenders tend to give them a little bit more easier financing, because now they have been showing payments on that subject property. So they kind of get like an equitable interest in the property. So it's a lot easier. And what I do is so the purchase price on that one, I purchased it, I think, for like $264, somewhere in that area. And got to remember, I came out of pocket with money. And I turn around and sold that. So I sell it for about 10% more of today's value as a premium. And that's kind of where I make my money. So I make my money when they purchase it at the end. So I sold that one, roughly run around like $329, somewhere in that area. And then I also make some money on the monthly cash flow. So on that one, I'm pulling in roughly about $350 a month. So I'm helping the seller out, saving her credit. Then we're also doing the end buyer, getting in, so he's going to purchase the property. So that was one case, but majority of them are people.
A position of the asset, and you maintain some of that cash flow then.
Correct. Yep. So I'm creating arbitrage, right? Exactly. But a lot of them also are straight owner financing, where 40% of homes in America have no mortgage on them, and a lot of people don't know that. So a lot of times, people that want to downsize, that had a family, they want to downsize and they've already had money saved. So they will sell that property as like your typical, like, I'll go through the process and, hey, you want to buy this I'll buy this through owner financing. I give them 100% of today's value. Let's say the house is worth $300,000 to value, and that's what they're listing it for. That's what they want to sell it for. And they sell it traditionally with a realtor. All right. Say if a buyer comes in and they want to buy that property, what do you think the buyer's going to put in for an offer, roughly? What do you think?
Less, maybe.
I'm sorry?
10% less.
Yeah. So what do you think? Like, 280, they're going to offer 290?
Yep.
Okay. And then they have real estate commissions, and that's about 6%.
Yep.
Yep. And then they're going to also, sometimes the buyer's going to want they want the seller to help out with credit. So something like that. So you're already $20,000 less from negotiating. You're going to probably another, like, $12,000 in real estate commission fees. on a 380 property.
Yeah, what'd you say,
And then you're gonna,
380,000? Yeah.
yeah. So they're going to be less about, $30 to $40,000, if not a little bit more. So a seller is going to keep that profit. They're going to make additional $30 to $40,000 more. Plus they're going to get interest on it. So now they're going to, instead of losing that 30 to 40,000, it's going to turn it, depending on how long they want to hold the note for, that could turn into 60, 70, 80,000, because that becomes a note and they're carrying it and they're making interest off of it. So then what I'll do is I'll say, okay, this is the note. We'll do the note, like I say, 3.5%. Then I'll turn around and sell that roughly like 5 or 6%. So that's kind of how I make that margin.
And so when you're walking through with your students, and I call them students, right? Or
That's good.
Your joint venture partners, the ability to just kind of know really the laws and the ins and outs of that is really important, right? I mean, it's just something that you got to continue to stay up on, and that's kind of why they reach out to you, and you can mentor them through that.
Yes, absolutely. Yeah. And there's different, I always tell people, join your local, the local real estate groups. But now with today's technology, with Zoom and everything, it's so easy just to network with many people with different experiences. And I always tell my students also, hey, talk to this other investor. He's good at this, or this one's good at this one. So with myself, the kind of way I look at it is I have a tool belt on. So depending on the seller, you pull out a different strategy, like different tool. You're going to buy it straight cash because that house is a rundown, and it's a probate, and the children don't want anything to do with it. They just want to sell the house, and so it's a fix and flip. So you're going to purchase that like 20% less of the value. Or does the seller just need to get out of that property quick as possible, lease option? So there's many different strategies, and depending on the seller's needs, that's the tool belt that you pull out. And a lot of real estate investors, they only specialize in one of those strategies, where I tend to know all of them. And that's kind of how we tend to go about that. And I teach those people, hey, do it this way. There's also what's called like contracts or deeds of land contracts. So there's a lot of different creative ways to purchase property with like literally no credit and poor credit.
A lot of the students, are they learning to do kind of what you're doing, or are they more interested in buying the properties themselves?
Both. I've done both. I've helped both. A lot of times once they learn it, they kind of like, oh, wow, I want to kind of get into it full time, because they realize that they can make some pretty good cash flow. So my goal is like every year, I don't want to get big. I want to keep small. I've had different businesses over the year. I just want to kind of keep it on a small level. I'm looking to purchase roughly about anywhere between 3 to 5 properties a month. However, it's like they're coming in left and right for some reason. Last month we did 11 of them that just fell in my lap, and I didn't want to do that many. Yeah, so I just want to keep it small. But what's happening a lot of times is I'll show them, but then they want to build their portfolio up as well and add more value. My goal is like $500,000 a year in add net worth, and $5,000 more monthly cash flow, positive cash flow. And that's pretty much what I did last year during COVID, believe it or not, just sitting at home. And COVID was just like, as much, believe it or not, COVID was for the real estate buying virtually, it made it a lot easier. Instead of getting in a car, driving out there, you could speak to more people doing it virtually.
Yeah, so that's an interesting topic. So, with COVID, right, what was some of the challenges or things that you were able to adapt to? You kind of talked a little bit about it, but just when COVID hit, what was kind of going through your mindset? Were you thinking that you got to revitalize your business, or what kind of things were you working on, or was it just kind of an easy transition?
Well, when it first hit, like the first month, everything was going into chaos. And like, so I don't know if some people may know this, but Zillow, there's a couple other ones we call them iBuyers. And they're in markets and they're actually buying properties. They'll go out there and just automatically buy it based off of the algorithm. You could sell your property through Zillow immediately, and Zillow's heading in that direction. So what happened was Zillow during that time period canceled over 1,500 contracts immediately, because they didn't know what was going to happen with the real estate market. Wow. And yeah, so everybody was freaking out. And then down here, I'm in Florida. I had people that had Airbnbs, and they were like freaking out. They were calling me up. So I was picking up Airbnbs during that time period. Like sellers, people just wanted to get rid of them. They were worried because that was their business. And some of these people were really tight margins. Um, but so it took about I say that the hard part was mainly the title companies and closing agents. They couldn't do the title researches and stuff because the courthouses were closed. That is really what slowed down. And then some of the inspections, the people going out and doing inspections, but the sellers doing stuff virtually and stuff, they had no problems. But I think the bottleneck was the title companies and the courthouses trying to get the research on the land records and the properties and make sure there's like liens and getting all that stuff cleaned up.
So how did you like quote unquote see the property? Would you just do a Zoom call or just?
I use local realtors. I call them boots on the ground. So they'll go into the properties, do an inspection report, let me know what just like any other type of inspection, and then if it's one that needs a lot of improvement, I'll actually hire a professional inspector and go out there, check all the foundation, making sure everything's good and up to par, and get an idea what the fix up costs. But a lot of these homes I call them like pretty homes, turnkeys that don't need a lot of work. Um, you know, those are the easy ones. I like those a lot because, people take care of the homes, and then whoever's buying the home, if you're doing it on a rent to own or lease option or even owner financing, a lot of these I do owner financing. I don't have any problems at all. I had one guy during COVID that up in Ocala, Florida, that he didn't want to buy the property, he wanted to move, so he just stopped paying on it. And he knew during COVID that he couldn't have to be evicted or anything, so he just kind of worked a system, played it. So I wasn't collecting any income on that for roughly about 6 months, but I had to keep making my obligations on it. But that guy wasn't hurt at all. We finally got him out, even though that they weren't allowing it. My attorney actually showed like we had to hire somebody showing that this guy was still making money. He wasn't hurt. So that's why the judge allowed him to get out of the property. But it's only one guy, but that's part of the game,
Well, it's interesting too, is what COVID, I think it did for a lot of businesses is helped either them realize that there's more efficient ways to do things, that a lot of big companies wouldn't have thought otherwise, right? Like, having the virtual world really come alive to where they have been efficient. And it's just, I think it's been a challenging year for many. And I think there's also been a year for people where they were able to not take advantage, but benefit from, the pandemic. So I think it's just anytime as entrepreneurs, as we're running a business and growing, right, it's the ability to adapt to change. And sometimes, take the blinds, like be open to the blind spots that, that we may not always think that we have, right? And just be able to adapt to look at different things and how can we persevere through this. And it's not always easy by any means. There's probably a lot of anxiety and stress, but I think it can be, I talk a lot about getting out of your comfort zone, right? Mm-hmm. Because I think it's really important that we try to live there, because that allows us to grow and continue to thrive in any aspect, whether it's business or whether it's, mm-hmm. raising family or marriage or whatever it is. I feel like complacency can lead to a lot of just unhealthy things, in my opinion. But
yeah, I think it's kind of fun. I've been through a few of these cycles through the lifetime. 9/11 was one where we had to adjust. During the housing crash, this was another one. And I honestly, that's when you look for opportunities and you can find great opportunities. And I'm sure from this, there's going to be a lot of new companies that are going to become huge, like, like the DoorDash or the Ubers, and some of these big ones came out of the last major crisis. So I like it. I thrive on it, and I kind of enjoy it and just find opportunities. And I've always done better during downtimes than uptimes. I don't know why, but it's just, I find the opportunities and kind of go with, and just kind of, you have to be very flexible and adapt and pushing yourself, pushing yourself to limits. And like you said, the comfort zone. I'm always like, all right, what can I do next to be outside my comfort zone? And it's, always, every day I'm always doing, like, I spend an hour a day, always constantly learning something new, and always kind of just constantly learning something. And I'll go for a bike ride along the beach or walk the beach, and then I'm always listening to like a podcast or audiobook or something, just to always constantly learn something different. It's just, You always want to kind of keep pushing, even in business, even in relationships, really, even friendships, with different friends and throughout different things. Um, so, whoops, I thought I froze there for a moment.
So,
Sure,
so we'll pause.
no problem.
So, yeah, no. So, okay, let me pause, and
No
we'll
problem.
so color stop here, and we'll start over.
Sure, no problem.
So, yeah, the ability just to continue to look at those. Now, it's interesting that because you were in the mortgage industry in 2008,
Yes.
right? And
Yep.
that was a lot of mortgage companies or a lot of lenders went out of business,
Yeah.
and that was a tough time for a lot
Uh,
of.
yeah, I actually adapted, ended up starting another business, and within a year, we ended up having 81 employees in that new business.
And what business was that, Mark?
We actually it was still tied to the mortgage business. It was doing loan modifications, right?
Mhm.
And what happened was we hired mortgage underwriters from the mortgage industry, and then some of the servicing companies reached out to us, so we were helping them out with their overflow. So they because we were hiring because we knew a lot of people in the mortgage industry and they all lost their jobs. So like, hey, you know what? We put together a whole outsource of helping the banks and the lenders redo the loan modifications at that time. So and then so we had that business and we blew it up to 81 employees in less than a year.
Well, do you still have that business? Did you sell that off?
No, we got rid of that one. No, what happened was the state of Florida changed the laws where to be in that industry, you had to be a law firm. So we sold that law. We had to sell it off to a law firm. And that's how we shifted over to, and then I don't know if I mentioned before, but we ended up having a lead generation business in the advertising agency for about 10 years as well. So what happened was we had so many leads coming in. We were forced to kind of sell that because of the regulations, and we fell into the lead generation by accident. So then we had quick clients like Quicken Loans, Bank of America, thousands of attorneys, and in several verticals, we actually were like one of the top 3 companies throughout the country, selling leads and doing advertising and marketing. We actually ended up being a Google partner. So
Wow.
it kind of just fell into that by accident.
Was that lead gen for real estate mostly, or was it?
It was the finance, it was the mortgage world. It was loan mods, then mortgage, reverse mortgage were big for a little while. That was kind of the first thing that started coming back, the VAs and reverse mortgages.
Mhm.
VAs were actually, I'm sorry.
Yep.
And then things started coming back. But we were doing a lot of like foreclosure defense, not foreclosure defense, a lot of loan mods helping the consumers and everybody going through the whole crisis. Millions and millions of people were behind in the mortgage payments. So they're reaching out to lenders and they had to like have the loan re-underwritten. And so like some of the lenders like Quicken Loans, not really Quicken Loans, Linton Loans. What happens is a lot of times when you close on a mortgage, it goes to a servicing company.
Mhm.
And the servicing company is who we really worked with. And we were helping them out with all the loan mods. And they were servicing it for investors like Fannie Mae, Freddie Mac, and all those type of people. So we actually had a whole mortgage underwriting team that was doing all those files.
Wow. A good takeaway from Mark here is that there's always opportunity, even in downside environments or downside markets, and we just have to kind of look outside the scope of what our tunnel vision is. I mean, it's important to pick a lane and own that lane, but of course, when there's times to adapt to change, we got to be able to realize that there's other opportunities, and even if the business is along the same lines, there's other opportunities, and you just kind of have to take a little pivot, and you can create great other streams of income and other entrepreneur mindset operations and opportunities. Really, you know. What would be the one thing that through your journey? I mean, you talked about how you grew up working at McDonald's, and now here you are today. Like, what would be a nugget or a voice of wisdom or reason for people that are either wanting to get into real estate or even just into entrepreneurship or running their own business? What would be something that you would share with them to say, this is what I would say would be really important to
I would say listen to people, your friends, your family, customers, your employees. Um, Listen to them because you're not always right, and it's always good to have other minds and getting feedback. And when I was younger in my 20s, I was like a little young and stupid and stubborn. Oh, it's my way. No, da da da. But as you grow, you kind of like listen and like, hey, wait a minute. they could be right. And then you got to be open-minded to it and see, especially when you're growing a business and you get to points in business where you get stuck and it's hard to grow to that next level. And a lot of times that is because you're not listening, and it could be right in front of you, and your employees or even your customers could see it, but you don't see it. And I would say that's probably one of the biggest things of just listening and letting your people grow and make your people part of your family. Just treat them. I always have a belief of like treat your employees just like your customer, and give them empower. I think that's probably one of the biggest things, and always constantly keep learning from, through others, and find somebody that's good mentors, and you're going to outgrow that mentor, and then just find another mentor and just kind of keep growing and just constantly learn, and then also give back and help people along the way. I enjoy that, helping people and see them grow. And I've had people that, I taught something and they surpassed me, and I'm like, oh, that's great. That's probably one of the biggest things, is just listening to other people and get feedback. Not everybody's right, but you can see different point of views where you may not see something.
What would be something that you would say, okay, throughout your experience, this is something that I would, never do again, or, things to think about as you're going, things that, I guess, what would be something that if you could take back, right, as a business owner, like as you have grown multiple companies, what would that be?
I've had, like, some companies have been successful, but I've had a couple companies that weren't successful. And I would say from my first lesson, when I grew up that one business and then I lost it all, is like, I dipped in the other business where I lost it all. I had 60 employees, and I had dipped into my own personal savings for 2 months to cover payroll. I would say limit your, like, if your business is struggling and it's going backwards, limit your cutoff point of how far you're going to take it and not lose everything. Have a line of how much money you're going to put in, or how long you're going to go until you let that company go. Because a lot of times a company might be going in the wrong direction, and eventually it could go bankrupt, but you're trying to keep that company going as long as it's possible. You got to know when to pull that plug and not lose everything. That's probably, and I learned that in my late 20s and early 30s in that one business where I lost 90% of my savings because I dipped into payroll. That's probably one of the biggest learning. And if I had that money and I saved it, I'll be in a whole different position probably even later on. But it was a learning experience. I'm glad I learned that when I was young.
Because when the business is oftentimes your baby, right? And it's just like you're doing, and you just believe in it, right? And you're just doing everything you possibly can to hang on. But sometimes it's important to step back, look at the financials, and look at, okay, is it time to make other decisions? And because again, listen to people, right? And listen and try to take your blinders off, because again, we can get so entrenched in what we're doing, and we think we can get out of it. And sometimes it's just maybe we've got to make a different course change, and it could have a big impact. So awesome.
Yeah, I'm sure you've seen some of these people that on Shark Tank, they've been in there and it's their baby, and they're telling them advice from like 5 people that are, extremely successful, and they're trying to button heads with them. So that's probably one of the biggest things that was my learning experience. But you hit the nail on the head on that. Absolutely.
Awesome. Man, I really appreciate you being on here today. If people want to reach out to you and get in contact with you, how can they reach you and connect with you?
Sure. Probably I'm on LinkedIn, Mark Monroe out of Boca Raton. My website is tiassets.com. But a lot of times if you're on social media and Facebook, I have a pretty big group in there called Creative Real Estate Investing. Just search for that. And you can follow me. I'm always active in there. I'm always giving feedback and helping people for free and just giving them advice. But yeah, that's probably the best way of reaching out to me.
Awesome. Well, and again, thanks for being on the show. And for those of you that are listening, please write comments and like and subscribe. I think there's just a lot of great content out here. And again, please write reviews, give us some feedback of things that you might like to hear, want to hear. And maybe even post some things that you got out of this conversation. It would be fantastic. So, Mark, again, I really appreciate you being on, and best of luck to you in 2021, man.
Thank you so much. Thanks for the hospitality.
All right, buddy. Take care.
You too.